Hey everyone, Rivian reported third quarter financial earnings results, and in this video I'm going to review those financial figures. I'm going to update my buy recommendation on Rivian stock. Heading into this quarterly update, I did not have Rivian stock rated as a buy. I had it rated as a hold, and you can see the market reaction to Rivian's third quarter earnings results have been mixed. Initially, the stock price jumped as the company raised production guidance, and then as more details started to come out, the stock price has come back down. So let's take a look at the third quarter earnings and let's figure out what happened, what's going on, and let me update you on what I think the stock should be, whether it's a buy, hold, or sell.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the key things I was looking for from Rivian in this quarterly update was an increase in the production guidance for the year. Coming into the quarter, Rivian had projected that it was going to produce 52,000 vehicles in 2023. But as I highlighted in previous videos, the company is well ahead of schedule to hit that 52,000 mark. And so I was looking for the company to raise the guidance for the full year so that it would hint that the fourth quarter is going to be at least in line with so far what's happened in the year. And I was happy to see that management did indeed raise the target for the year, increasing the 2023 production guidance to 54,000 total units. Now the company's at an annualized production rate of over 65,000 units. So if it stays at the pace it was at in the third quarter, that suggests that in 2024 they can produce over 65,000 units, and that's if they don't make further progress in the fourth quarter, which I suspect they will. So nice progress here from Rivian in increasing their production guidance, and for now this is critical for Rivian because they still have customer demand to meet the increased production. So this increased production is going to people that are buying the cars. For the most part, they are seeing some increases in inventory, but for the most part, they're still making strong sales and they haven't needed to offer the kind of price cuts that some of the other EV automakers have had to do. So that's been working in Rivian's favor. One of the other major things I was looking for from Rivian in this quarter was an improvement in profitability, or to reduce the losses on the bottom line. Remember, the company is losing massive amounts of money, burning through billions of dollars every year. So I wanted to see them shrink those losses, and we did see that, although to a small degree. So compared to the second quarter of 2023, the gross profit per unit delivered in the third quarter of 2023 improved by approximately $2,000. And remember, this is only accounting for the gross profit per unit that was delivered. That means there's a number of other cars that it produced that it's not selling, and they're not counting that in terms of the gross profit because they're likely going to have to take an inventory write down on those units to sell them at lower prices because they're not selling at the current prices. They're sticking in to the inventory. So management expects to see continued benefit going forward due to further improvements in the material cost per unit from the reduction in commodity costs, the introduction of new technologies, and ongoing negotiated supplier price reductions. Excellent. You should hope to see this from a company in growth mode to make demonstrated, proven improvements in the learning curve, right? Getting better at what they do, getting better in the manufacturing process, learning from the mistakes, learning how to do things more efficiently, and thereby increasing their effectiveness. And you're seeing that from Rivian. And then also, as the company scales and grows to a larger size, you want to see them be able to negotiate better prices with suppliers. You want to see them exercise their purchasing power, and you're also seeing this from Rivian in the early stages of their growth. So this is good news for Rivian stock investors. Continuing the story with more good news, Rivian during the third quarter said that production started for the R1 Max Pack variant with an EPA estimated range of up to 410 miles. This increases the range for the car and sells at a higher price, so increasing the average selling price, and it's likely to improve gross profit margin overall if more and more customers choose this option when they purchase one of Rivian's vehicles. All right, so in the third quarter, Rivian produced 16,304 vehicles and delivered 15,564. As was the case in the second quarter, the majority of their production during the third quarter was the R1S, the SUV. Rivian has been mentioning that the SUV has stronger demand than its pickup truck. The good news for Rivian is that the SUV has higher average selling prices, and so they're gaining higher prices by selling more of the SUV instead of more of the pickup truck. So that's good news for Rivian in that sense. It's interesting, however, that it's having more success with the SUV in that there's more competition in electric vehicle SUVs than there is in electric vehicle pickup trucks. Rivian is really, and the Ford F-150 Lightning, and there's a couple of others, but for the SUVs, there's a lot more SUVs in that space, and the competition is fiercer, but Rivian is finding more success in selling its SUV. That's interesting, and that suggests that customers really like what they are getting from Rivian's SUVs. I mentioned earlier the company also raised the production target, and you could see the quarterly production taking a nice jump upward in 2023, and it looks like for 2024 this target is going to be much higher, at least 65,000. I would say closer to 75,000, as long as customer demand remains there. Right, we've been seeing customer demand for electric vehicles really taper off from a number of other companies, and Lucid also reported earnings earlier and suggested that it was going to decrease production because it doesn't have demand for its cars. It doesn't want to just produce these cars that people are not going to buy. And so Rivian, yeah, they can produce more. They have the capacity to produce up to 150,000 units right now with their one manufacturing facility. But the question is, will there be customer demand if they increase production to 65 or 75,000 units next year? That's the big question mark. So as many of you might already know, Amazon is a big investor in Rivian stock. I believe they own close to 20% of Rivian stock. I think 17% is the precise number. And as part of that investment, Amazon has agreed to purchase 100,000 Rivian electric delivery vehicles by the year 2030. So far, however, Amazon hasn't purchased as many vehicles as Rivian was hoping for. It has just about 10,000 electric delivery vehicles in its fleet. And so Rivian made a deal to end this exclusive relationship with Amazon and allow for Rivian to sell its electric delivery vans to other companies in addition to Amazon. So that's an interesting move, and I'm looking forward to seeing in the next quarter if Rivian announces deals with other companies to provide them with these electric delivery vans. All right, so now let's get a look at the financial performance and looking at its revenue, its costs, and the profit on the bottom line. And you can see here revenue grew nicely to 1.337 billion in the quarter that ended on September 30th. That was up from just 536 million in the same quarter the prior year, so more than double the revenue the company had achieved in the same time the prior year. And the gross profit loss also improved from a loss of 917 million in the same quarter last year to a loss of just 477 million in the current quarter. Loss from operations of 1.44 billion was also an improvement from the loss from operations of 1.774 billion in the same quarter the prior year. And this massive loss in operations is why I've hesitated to recommend Rivian stock as a buy, and I've kept it as a hold because it's just losing so much money on the bottom line, and it has forecasted that it's going to be gross profit positive in 2024, but that's just gross profit. That's not from operations. That's just up here, this line item. And then Rivian still has all of the operating expenses to spend on, and then it can be profitable on the bottom line. So this long path to profitability, as well as the fact that I don't like investing in car manufacturers, car sellers. I think the car industry is not one that I would want to be invested in. It takes billions of dollars of capital investment. It's risky in nature. It's cyclical, meaning that when the economy does well, the car company will do well, but when the economy does poorly, the car company will do poorly. And it's the industry structure is geared towards always having strong and fierce competition that brings down profitability industry-wide. And it's hard for any car company to say, okay, you know what, we're not profitable, we're going to close our doors and leave. And so because car companies don't shut their doors, there remains more and more and more car companies, and the supply of vehicles per year continues to exceed the customer demand for vehicles. And so the structure, the nature of the industry is not one that I like to invest in. Especially, I don't like to invest in companies that are losing money trying to get into this industry, spending billions of dollars to get in. So all of those reasons, and the fact that Rivian is losing so much money on the bottom line still, holds me to still keep Rivian stock as a hold. The company is making good progress, it's making improvements, it's doing all the right things, it's getting there, but I still need to see more from Rivian before I could recommend the stock as a buy. But before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one.